The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing daily routines and processes, building your headspace, your belief system, your mindset, and your daily habits to bulletproof yourself to master the markets. It's a free audio program. The links are in the description box below. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, a short mindset reset and technical video, just reinforcing again the importance of sticking to the process, hunting out daily signals, whether they're markets in breakout or consolidation, because all markets only do 3 things. And the purpose of that on the higher time frame is to target parabolic trade setups on the smaller time frame. Now, Thursday's day 2 on the backside of the week, we talk about ACBs. I'm always hunting the ACB opportunity, whether it's in the long or short direction. ACB means it's not coming back, which are scalable. And when you know a trade setup is potentially not coming back, we can scale them up in size. And we want to find those same parabolic opportunities over and over and over again. Now, I talk about hunting the same repeating daily chart signals myself over and over and over again. I have a bias to shorting, and sometimes I miss out on explosive range expansion long trades or trend trades. The same process applies in either direction. Today's Thursday. It's day 2 on the backside of the week. Ideally, we could be targeting the A++, the ACB trade setup. When we're in a market that is potentially continuing to trend, we can have range expansion opportunities with the trend, whether they're in the long or short direction. We'll look at a couple of examples of that today based on daily signals and trending markets that continue to stay in breakout. The reason why this is important is that some traders are constantly trying to counter trend markets just because they give a daily signal. And it's important to understand that when a market is still in breakout and trending, that they can stay in breakout and continue to trend. And as I've mentioned in previous videos, the inside day often can represent a market that is consolidating and will either continue to trend or offer reversal setups. And those will typically be at extremes, weekly or monthly levels. Now, I really want to emphasize simplicity. Think simple. Monday's day 1. It's the opening range in a new week. Tuesday's day 2. Typically, we expand the range. Wednesday's day 3. There are 2 types of setups on a day 3, either reversal or continuation trades, trend trades. Now, in a strongly broken out market, we can have continuations on the backside where markets may consolidate on Wednesday. We can have narrow range days, inside days. Read the bottom of this middle section on Wednesday, signal days. We can often have markets that break out, pull back, consolidate into the inside day, and expand again on the backside. So the backside of the week can continue to trend, and we may get free cash Friday. So listen closely. When markets are trending and in breakout, Friday may offer traders reversal setups. The Friday reversal setup, day 1, day 2, day 3 on the backside of the week. So when markets are still in breakout, and traders are trying to counter trend markets still on the front side, this is where traders will get chopped up, which comes back to me repeating the same things over and over again, hunting the same signals. When there's no setup, don't fight the market. We're targeting parabolic opportunities. So day 2, we're looking for signal days on Wednesday, and whether or not that higher time frame template is offering traders a thesis for a day 2 range expansion or reversal trade setup. Day 1, day 2, day 3, reset. Wednesday becomes day 1 onto the backside of the week. Day 1, day 2. Do we have a reversal or expansion opportunity? The EuroUSD gave traders an inside day signal day on Wednesday. Again, for traders who have done their homework, the first day of the month was in breakout. When we started our new month, drawing the high and low of that first day shows traders the breakout of our first day and the reversal closing back on top of the first day right at the beginning in our week 1 breakout and a failed breakout reversal, taking out the lows of the previous month, higher time frame levels. We had an inside day on Monday. We had a market that broke out and pulled back, closing at the extreme of the inside day, and Wednesday was an inside day. Now remember, I've said where markets break out, draw the extreme. If this breakout fails, we could be targeting the other side of that range. Why is that? Because higher time frame stop loss levels may be at that extreme. But we're just keeping things simple. Day 1, day 2, day 3, signal day, a market that remains in breakout from our reversal. This market has broken outside of the high of the first day of the month, coiled sideways, continued to make higher highs, coiling again on Wednesday, giving us a signal day. Now we're inside of a reversal template setup, and if we just project again the breakout level across, I want traders to understand we're not just trying to catch highs and catch lows. We're targeting explosive parabolic opportunities where markets are going to explode and potentially not come back. As we head into the Europe Open, we have a market that's coiling sideways on day 2 on the backside of the week. Traders from the masterclass will recognize that you can only trade in one direction. Now, we just had that slide up. You'll also notice that Tuesday's closing price projects across and acts as a support level. Day 1, day 2 on the backside of the week, in a higher time frame thesis of continuing to trade in the long direction. I want to emphasize to traders that the quality of the setup is what's important. The quality of the setup. We have major round numbers, and we can project this market in a range expansion target using the high and closing price levels of the day for a 200% expansion of the range, which also takes us, if we just follow this market upwards, we can trail this above the quarter level. Simple, scalable, reproducible. An inside day parabolic explosive move on the backside of the week on the EuroUSD in a market that had broken out, pulled back, broken higher again, pulled back into an inside day higher time frame signal for the explosive day 2 range expansion in a trending market. Now we saw the exact same trade setup on Tuesday, day 2 on the front side on the Dow 30. And I just want traders to walk back through the process. First trading day of the month, the market closed in breakout. The market broke down, pulled back, broke down again, coiled sideways, and reversed at the beginning of our new week. Monday closing at the low of the breakout day. The last trading day of the month was our extreme. The first trading day closed in breakout. Monday closed at that level. Now we had several traders looking for reversals and everything else, and I want to paint a simple picture. We had a daily high level, low-hanging fruit. If day 2 explodes through that area, we have 3 things that markets do. They either break out, pull back, continue to trend, or they break out, they pull back, they try to trend, and they reverse. And now if this breakout is going to fail, day 2 on the front side may offer traders an ACB parabolic trade. Now remember, we're talking about the ACB opportunities. This happened in the Europe-London session, and when it happens in an earlier session, that market still may come back. If it happens in a U.S. market session, a 3-session setup and an ACB market template, chances are it's not coming back. We just saw the session opportunity on the euro. Now this is Tuesday on the front side of the week. The green line showing November 5th high of day, the low-hanging fruit level. Traders, you can only trade in one direction. Now here's the thing. Markets only do 3 things. We break out, we clear out the high of day level, we pull back, and our 10 a.m. club gets the trade. Now, this setup is dummy proof. The setup is dummy proof. Why is that? Because all time frames are driving the move. But understanding that we're clearing out that higher time frame on the open, traders are trying to trade the open all the time. Let's step back and look at this. Day 2 front side, a 3-session setup, and it's not coming back. A day 2 backside range expansion opportunity in the Europe session, session 2, it might come back, meaning lock in the profits. Now this market could continue to stay in the long direction, but a 3-session setup offers traders the ACB, the hold till close. If I'm trading an ACB template and I get the opportunity in an earlier session, that's the session trade. Lock in the money and get on with your day. The reason I say that is that we have markets that are continuing to trend. Don't just look to counter trend them. It's day 2. We may now be looking for Friday reversal opportunities or trend trades. Day 3, 2 types of setups. Markets that are in breakout can continue to stay in breakout. ACB templates will coil sideways tightly. So when we have markets that continue to make higher highs, higher lows, expanding the ranges, allow these markets to set up. Understand that I don't have to counter trend an extreme. I can allow that market to set up into a first red day or a first green day or a market that's in breakout to go into consolidation, giving me an inside day signal day. Free Cash Friday may offer 3 session setups from one of those daily extremes for either buying low or selling high. All markets only do 3 things, so being patient and sitting on your hands for the 90-10 candidate is the only challenge traders have. The trader themselves is the only variable. Keep it simple, but being patient and understanding the most important thing is all markets only do 3 things. They break out and they trend, they break out and they fail in reverse. They will give us signals, or they're in a higher time frame trading range and there are selling high and buying low opportunities. The best setups, not our favorite market. We want to trade markets that offer us a 90-10 edge. And if there's no edge, being patient and willing to sit on your hands. If you're trading inside of a narrow range, be prepared to potentially be chopped up. If you're targeting markets that are at extremes, what is the daily signal? Is there a setup? Are we inside still? Be patient and allow the markets to set up. This is a dummy-proof trade setup. You cannot screw this up. You can only trade in one direction. You can scale into this opportunity. You have a range expansion target. All time frames are driving this move. There's no science. It's explosive. It's fast. It's over with quickly. Locking in the money, walking away. That's easy money right there. Zero stress, zero thinking, zero emotion, and for the most part, zero management. Entry, stop loss, and a take profit level. Keep everything simple, repeatable, and scalable. Leave the science projects for the smart traders. Have a great day, traders. May the markets go with you.